All right, and we are live. So, in today's lesson, we're going to be looking at the lending decision in terms of how banks actually make decision when they're lending you money. So, when you're going for a line of credit, or when you're applying for a line of credit at a bank or any financial institution, so how do lenders actually lend money? What is the process? What is the decision criteria that they look at to actually lend you money? Okay, so let's get into it. So, in this diagram here, you're going to see, so this is the process. This process is very, it's universal, whether you're going to apply for a bank for loan at TD, RBC, Bank of Montreal, or Scotia Bank. It doesn't matter. They all use the same process. So that's why it is very, very important that you understand how the process works, their criteria, and how they're able to actually make decision in terms of who gets money, who doesn't get money, who gets rejected, and who gets approved. So let's start in the beginning. So when you're applying for a loan line of credit, now there's two types of there's two ways you can do it. You can go online, all right? So you go to their website, www.rbc or td.com, and then you go and do the application there. Now, when you do it that way, that's what it's called, the automatic underwriting, right? Because everything is done to the algorithm, the computer. So that's what you call automatic. So let me get a pen here. Let me get my pen. Let's see here. So if you do it this process, so if you go online, that's what you call a automatic. Let me write that down. Automatic underwriting, right? Or let's just call it automatic process to make it simple for everybody. So the automatic process is you go online, you go to the RBC, you go to the TD, you go to the Scotia Bank, you put in your information, you request the type of credit card or loan that you're applying for, and then within 60 seconds, it gives you a response. Either you get uh, approve, or you get denied, right? So that's what you called a automatic underwriting process. Okay. So, all right. So now that you know that, let me go ahead and I'm going to erase this here so I can make the board a little bit um, uh, more clear for you. Okay. So hopefully you've learned something already, that there's two types of process. There's the automatic process, and then there's the manual process. The automatic process, as I mentioned, you go online, you make your application, and within 60 seconds you get a response, whether you get rejected or you get approved. Now there's the manual processing. So the manual processing is it's manual processing or underwriting, right? So either it's the same term, right? So whenever you hear this, automatic underwriting or manual automatic process, it's all the same thing. Manual processing or underwriting processing, it's all the same thing. It's just a process, right? So the automatic is when you go on website, you go on their website, you apply, you either get a response within 60 seconds or you get denied. The manual underwriting is when you either go to the branch, right? You go see a bank manager, or you do it over the phone. Somebody will take they'll take your information over the phone, and then they will transfer that information out to the credit department. That's what you call manual underwriting. Okay, so now this is the process. So today we're going to be looking at automatic underwriting or automatic process. So there's you right there. You go online, right? So that's you. So let's say that is you. Let's bring this here. So right. So let's say you go online, www.rbctd, whatever the website that you're using, whatever the lender, you go put in your application because you're trying to get a line of credit, or you're trying to get okay, let's say credit card. You want to get a credit card for $10,000. So you enter all your information, and then what happens is that once you enter all your information, so let's say RBC is the bank that you're planning to apply for. So you go to rbc.com, you enter your information, and then you press submit, and then RBC is about to make a decision whether you get approved or whether you get denied. Now you don't see the underwriting process. You don't see the underwriting, the automatic underwriting process, or the automatic uh, uh, process at all. So what happens is, the moment you hit submit, because they're able to make a decision within 60 seconds. So how are they able to make that decision within 60 seconds, whether you get approved or denied? So how are they even making that decision? Where are they getting that information? Well, very simple. So you go online, you put in your application, you press submit, and you're applying with RBC. So what RBC will do is this: they will either pull from one of these credit bureaus, so either Equifax or TransUnion. Now, remember, in Canada, you got to remember this, right? That's why it's very important you understand the underwriting, you understand the credit granting decision, so that way you're prepared in the future when you're applying for credit. You're not just applying for credit, just like that, but you're applying credit, knowing the process that is involved in it. So in Canada, you have two different credit bureaus. You have Equifax here, right? This is Equifax, and then you have TransUnion. These are the two credit bureaus in Canada. These two credit bureaus are basically like the data center. They store all your information. They store all your all your credit information, all your every time you've been late, every time you missed a payment. So these two credit bureaus over here, Equifax and TransUnion, they have all your information in terms of your payment history, in terms of how many products, that financial product you've applied in the past. So they know everything about your financial, your lending or your borrowing history. So let's go back to you. So two credit bureaus in Canada, Equifax and TransUnion. So you apply it, you hit submit. So depending on, now usually RBC they pull from TransUnion, right? So RBC, now once you press submit, RBC, the credit department, automatic underwriting, because remember this is all being done automatically within a few minutes, right? So RBC, their automatic underwriting criteria will now go to your TransUnion account, oh sorry, your TransUnion credit bureau, your TransUnion credit profile, to see what kind of information is there. So the first thing they're looking at is this first. So the first thing is they're looking at your identity. What do I mean by identity? They want to make sure that it's the right person that's applying for this credit. So let's say you're applying for a $5,000 credit card. You enter your information online. Why? Because remember, they don't see you. They don't see who you are. They don't see your face. They don't know you. They don't know you. They've never met you before. This is the first time you went online and you're applying for a $5,000 credit card. So right now they need to filter out some information. So the first thing they want to do is they want to identify who you are. So they're looking at your name to make sure it matches with the application. They're looking at your address, right? They're looking at your so name, address, and then date of birth, right? Because they want to make sure that they're lending out this product, or they're lending this credit card to the right person. So that's why when you apply, they're going to ask you some verification question that you have to identify, such as your date of birth, your name, your address, and then they will ask you some security question based on your credit profile. So that's why it is very important that you always check your credit profile ahead of time before you even apply for any credit. Because if you answer those security questions incorrectly, what's going to happen is that it's going to cancel your credit, your application. And if you try doing it again, then they're going to consider that application as fraud, because you answered the security questions wrong. And the security questions basically it's the information that they pull from your TransUnion credit bureau. So they'll ask you, for example, how many credit cards you have in your TransUnion credit bureau. What, name one of the credit card providers on your TransUnion credit profile. So that's why it's very important that you first, before you even apply for a credit card, you go check your credit bureau to see what kind of information in there, because you want to know what information is there before you actually apply for any credit card. Why? Because once you apply, then as I mentioned, they're going to ask you for some security questions. If you get those security questions wrong, well, guess what? You are under a blacklist. So that means that it's a fraudulent account. So that means you have to call them again, and they're gonna they'll ask you the same questions over again over the phone. So that's what you want to be able to check your credit profile, your credit information from either TransUnion or Equifax before you even apply for any credit. Okay, so that's what they're looking for. They're looking for to see if the information you entered on your credit card, it matches with your date of birth, your name, and address. Now, once you pass this identification information, the next thing they're looking at now, they're looking at your credit profile in terms of, they want to see, have you applied for any other credit in the last 3 months, right? So that's what they call inquiry. Do you have any inquiry on your TransUnion credit account in the last 3 months, right? If yes, most likely you're going to get rejected, because banks do not want to see, when you're applying for credit, they want to see that, okay, you haven't applied for any credit in the last 3 months or 2 months. Because if they see that you've been applying for credit too frequently, then they consider that as you're high risk. Then your ability to get credit will be very, it won't be good. So that's why when you're applying for credit, make sure that your credit history is clean. There's nothing in there for the last 3 months. You haven't applied for any credit in the last 3 months from any other lender, from any other bank, from anybody else. So make sure your credit is clean. So that's what they're looking for. They want to see, okay, is there any inquiry on your TransUnion credit profile? If not, if no, then the next thing they're looking at is they're going to look at your They want to see if you have any collection accounts, right? Collection accounts. So do you have any accounts that has been sent into a third party collection, meaning that you had a credit card 2 years ago, you did not pay for it, or you missed the payment and you just didn't make payments on it, and what happens is that credit card was now sent to a collection agency, so that information now is on your TransUnion credit profile. So that's why your credit profile is very important, because that's how these banks, right, RBC, TD, all these financial institution, they make decision whether they're going to lend you money or not based on what's on your TransUnion or your Equifax credit report. That's why you want to, before, as I mentioned, very important, don't just apply for credit just like that. Check your credit profile, check your credit bureaus to see what's in there before you apply for any type of loan, whether it's a mortgage, it's a car loan, any credit card. Before you apply, check your credit profile ahead of time. You want to know what's in there, because they make the decision based on what's on your credit profile. How many inquiries, how many credit that, how many other credit that have you applied in the last 3 months? If you have one, two, then most likely you won't get it, because they want to see that you haven't been applying for credit anywhere else. Collection, do you have any collection account? As I mentioned, have you been paying? And then they look at your payment history, right? Do you have any have you missed any payments in the last year? And if you did, how long, how many days late was that payment? Was it more than 30 days late? Was it more than 60 days late? Or was it more than 90 days late? Right now, once it hits 30 days, some banks, some lenders, they can work with you. But once you hit 60 days late, once you hit 90 days late, that's what you call delinquency, right? So now you're really your account is at a delinquent state. So you want to avoid your account going 90 days, especially 90 days, right? 30 days late, some companies will work with you, but once you start going 60 days and 90 days, then your chances of getting credit is very, it's like a slim to none, right? So very important, as I mentioned again, you go online, you apply for credit, you press submit. You're applying with RBC. RBC will go to TransUnion to try to pull your information. They will first try to identify that the name on the application and matches what's on your credit profile, on your credit bureau. In this case, they're pulling from TransUnion. They check the date of birth to match. If it matches with the application, okay, that's a check mark, right? So boom, they check to see if your name is correct on the application. Boom, check mark. Address is good, check mark. Okay, does this person have any inquiries in the past 3 months? No. Okay, check mark. Do they have any collection account? No. Okay, check mark. Do they have any late payments in the last 1 year? No. Check mark. Boom. So all that, you've passed that. And then the next thing you know is, so once you've passed that, now they're going to look at, so basically you've now passed the uh, their lending criteria. So now the next step is they just want to determine how much of that, how much they're going to give you, right? And they're going to determine that based on your credit score. Now, your credit score now, let's say if your credit score is at 650, right? So based on that, they'll be like, okay, he has a 650 credit score. We're going to approve them for, let's say, $2,000, right? Because they have a range, right? They have a range of scores that they look at. So let's say if you have your credit score, if it's your credit score is 680 and above, then they might give you, that's how they're able to determine the limits, because the credit score, the credit score just determines the limit that you get, right? So that's why the first thing is they want to look at to see on the application if it matches what's on your credit report, as I mentioned. And then the next thing is they want to look at the inquiries. Have you applied for credit in the last 3 months? If no, then that's a check mark. So now remember, this is all the automatic process. All this is happening within a matter of seconds. Within 60 seconds, once you finish your application, you're able to get a response. So it's very important that before you apply for credit, you go look at one of these credit bureaus, right? Equifax or TransUnion, because they already have a automatic process already set up. Okay, this person, yeah, their identity is good. They don't have any credit inquiries in the last 3 months. They don't have any collection accounts. They don't have any late payments. They don't have any late payments and so on. And then their credit score, let's say, is at that 650. Right, so 650 credit score, they'll be like, okay, you know what, they have a 650, we're going to give them a $2,000 credit limit. Right now, usually 650 is on the lower credit score end, right? So sometimes when when it's that low, they might start you with a smaller credit limit. So they might give you, let's say, $1,000, right? Just to for them to kind of test you out. So that's what you call the automatic underwriting process. It starts with you going on the lender's website, and then you hit submit, and then the lender, now depending on which credit bureau that they deal with, right, then they will go on that credit bureau. So if it's Equifax, they'll go to Equifax. If it's TransUnion, they go to TransUnion, pull your information, and once they're there, they're checking to see some information here. They want to look at that. Do you have any other inquiries? So meaning that, have you applied at any other financial institution in the last 3 months, right? And that will be a check mark. If it's a no, then it's going to check mark. Do you have any collection account? If it's a no, boom, check mark. If you have any late payments in the last year, if it's a no, boom, check mark. So now you've passed their automatic underwriting criteria. And then next, they look at your FICO score, so your credit score, to determine what limit that they're going to give you. So if they see that, okay, he has a 650 credit score, so, and then he passed all the automatic criteria, we're going to give them a credit limit of $1,000. So that is the underwriting process for all financial institutions that you need to know about. Whether you're applying at Scotiabank, whether you're applying at Desjardins, whether you're applying at RBC, whether you're applying at TD, they all use the same underwriting process. You go on their website to apply. Within 60 seconds, they can give you a response. So how are they able to make that decision in 60 seconds? Well, very simple. I'm giving you the blueprint. I'm telling you how they're able to do this information, because they're able to pull your information from one of these credit bureaus to see what's in your credit profile. And they already have a certain criteria that they're looking at. As I mentioned, they're looking at to see if you have any collection accounts, right? If you have collection, then you might not get that credit, right? Depending on the lender. They're looking to see your even another thing that I forgot to add was, let me just delete these stuff here so I can all right, so you want to be able to know this information, because this information is critical in terms of you getting credit, in terms of you getting approved or not. Because if you don't know what's on your credit report and you're going out and applying for credit from all these different lenders, you end up having a bunch of inquiries on your credit report that's going to really impact you. So that's why you do not want to go around and just apply for credit if you don't know what's on your credit report, right? So let me just remove this, and then I'm going to come back here, and then I'm going to write something else very, very important that I just forgot to mention. Okay, so what else did I forgot to mention one thing, right? While they're doing all that check mark to see if you have any inquiries in the last 3 months, any collections in the last 3 months, any payments in the last 3 months, also, not also, but it's also in there. I just forgot to mention it. They're looking at your utilization. Let's go here. Let me write that down here. They're looking at what's called your um your utilization. Hopefully that's how you spell it. Your utilization ratio. What does that mean? Basically, all it means is this. So let's say you have on your credit profile on TransUnion. Let's say you have on TransUnion, you have two credit cards, right? You have two credit cards on your TransUnion credit profile, and these two credit cards each have a limit of $500, right? So let's say that's credit card A has $500, and then another $500 at credit card B. So let's say this one is with TD Bank, and then this one is with Scotia Bank, right? Scotia Bank. Blah, blah, blah. Okay, so that is your those are the trade lines. So those are the accounts that are on your credit profile. So you have a five. So let's say you have a credit. Your total credit limit is $1,000. Okay, that's your total credit limit is $1,000 between these two credit cards. So $1,000, right, is your credit limit, right? So what they're looking at is this. So utilization ratio, basically it means this: out of all from your $1,000, the $1,000 that you have as a credit limit, how much do you owe out of that, right? So let's say, for example, on credit card A, which is TD, you have it, you have a balance of 250, right? So let's say with TD here, let's go back here. So with TD here, you have a balance of 250, right? And then with Scotiabank here, you have a balance of $100. So your total credit limit, so if you take 250 plus 100, so your total credit limit is your total credit balance between these two accounts is $350, right? So $350 now, you take $350, you divide that by 1,000, right? And then you times it 100. So your total credit utilization now is at 35%. So that means you are using 35% of your available credit limit, right? So now let me go back again. So let me simplify this again so that way you don't miss it. Your utilization ratio is basically is the balance in comparison to the credit limit. What is your balance in all the credit cards that you have? So let's say you only have two credit cards, as I mentioned here. Each credit card has a credit limit of $500 each. So TD, as I mentioned here, let's say you have a credit card with TD, it has a credit limit, right, of $500, and you have another credit card with Scotiabank, also has a credit limit of $500. Now you've used both of them, which means on the TD account, you used up $250 balance. So you have a $250 balance. On the Scotiabank, you have $100 balance. So that means you've used it, you've charged it, you've made purchases on it, right? Now, all this information, remember, it's all on your credit profile. It doesn't matter if you have an account with Scotiabank, with TD, all that information is all sent to where? Your credit bureaus, either Equifax or TransUnion. That's why it's very important to know what's on your credit bureau, because because you may be thinking, oh well, TD and Scotiabank, these are two different banks. So if I have a credit card with TD and if I have a credit card uh, with RBC, they're not going to be able to know the information. Well, you're wrong, because they are able to pull all your information in terms of payment, in terms of history, how well you're able to make your payment, how much you use it. They're able to pull that information by going to your credit bureau. So every credit card that you have with all these financial lenders, they are sending this information to either Equifax or they're sending it to TransUnion, because these are the two credit bureaus in Canada, right? So going back to the example now, if you have a credit card, two credit cards from two different banks, and both of these credit cards have a credit limit of $500 each, on your credit bureau now, it's going to show that you have a total available credit of 1,000. That's what your credit bureau is going to show. So in this case, we're going to look at TransUnion. So now what TransUnion is going to do is this: they're going to look at how much you owe on each of these credit cards. So if you have a 250 balance on one and you have $100 balance, they're going to add that up and say, okay, you know what, this person um, has a 300 altogether. They have a $350 balance between the two credit cards. And what they're going to do now is they're going to look at you. What is the credit ratio? What is your utilization ratio? Well, to find your utilization ratio, as I mentioned, you add up the two balances that you owe. So 250 plus $100, that will give you 350, and then you take 350 divided by $1,000, because $1,000 is your credit available credit, right? I mean, not your available credit, your total available credit between these two accounts, and then times that by 100%, by 100, and that will give you 35% utilization ratio. Now, 35% utilization ratio is a little bit high, because if you see here, right, if we come back here, if you look at this thing here, this is your FICO score, because remember, your FICO score is what determines what credit limit that you get. So if we look at your FICO score, and you'll be able to see now, let me mix. Okay, so all right, let's see here. So if you look at your FICO score now, you see here, so this is how your FICO score is calculated, right? You're able to get a credit score based on what's on your credit profile. So this is how FICO now calculates your score. So you see 30%. Let me get this here so you actually see what's going on here. So you see 30% of your score. Okay, let me get another pen here. Okay, boom. Okay, so here. So hopefully you can see this right here. So 30% of your score is based on the amount that you owe, right? So which means FICO score, the credit scoring system, wants you to stay at either 30% or below. But if you're at 35%, that means you're a little bit higher, which means your score might be, your score will drop. So this is very important information that you have to be able to understand what's going on when you're making a, when you're applying for application, when you're applying for loans, when you're applying for credit card lines of credit. This is the underwriting process right here. So your credit score, right, is based on, or your FICO score is calculated based. This is how your FICO score is calculated. 30% is based on the amount that you owe. 35% is based on your payment history. 10% is based on the credit mix. 15% is based on the length of credit, how long you've had credit, and then 10% is based on new credit. So every time you apply for credit, you get an inquiry, you actually lose 10% on your credit score. So this is very important information here, right? I'm going to be breaking this down step by step on each video, but right now I'm just giving you a summary of really what's going on. When you go online to TD RBC, you put in an application, and then within 60 seconds they're able to tell you if you got approved, if you got rejected. Well, this is the process right here. So that's you just hit submit. TD or RBC will go to TransUnion. They'll pull up your information. They want to identify you first. Name, date of birth, does that match with the application that we have? Okay, all right, it matches. Next thing you know, they want to see, okay, do they have any inquiry in the past 3 months? Have they applied for credit anywhere else? If you have, then boom, that's an X. So that means you might not get approved. And then the next thing they want to look at collection. Do you have any collection account? If you do, then that's an X. You may not approve. You may not get approved. And the next thing they want to look at your utilization ratio. Okay, how many credit cards do they have so far right now on their credit bureau, which is TransUnion, and what is the credit limit on each of these credit cards, and what is their balance? How much do they owe, and what is their total credit balance put together with both credit cards that they have, and then what is their utilization ratio. So that is the underwriting credit process. So you see, it's a lot of information, but you have to understand it. So at least understand that if you don't get everything, you know, keep rewatch this video so you can understand exactly how the credit card process, or how credit or how lending, how banks make their decision. So this is what you call automatic process right here. When you go online, you put in an application, and then within 60 seconds, the application might take you 2 minutes to do. You fill in your information, it answers you for some scary question, and then you press that button, that apply now button, and then you see that you're waiting for that wheel to turn to see whether you get approved or denied. Within there, it tells you, okay, in 60 seconds you will know. Well, in that 60-second, basically what they're doing is this: they are going to your TransUnion credit profile to extract all this information within that 60 seconds. Boom, boom, boom. They want to extract all that information. They want to know how much you owe. They want to know how many credit inquiries you have. They want to know what your credit balance is. They want to know what if you have any late payments, any credit card, if you have any collection account. And within that 60 seconds, based on that information, boom, they're able to approve your um, your application. So that is the automatic underwriting process that happens when you're applying for a loan, line of credit, credit cards online, right? Most of the time, you think that when you just go, you enter. No, there's a whole process. This is the process, right? Because remember, two credit bureaus in Canada, Equifax and TransUnion. And then you have your FICO score. Your FICO score is what determines what limit you get, and it also determines what interest rate you get. The higher your credit score, you will get lower interest rate on different financial lending or borrowing product, right? And then also, the higher your credit score, it also it will determine what kind of credit limit that you get on your credit cards, on your credit cards, lines of credit, and so on. So, but what approves the credit really is the approval. It happens on your credit profile. What's on your credit profile? How many late payments you have? What is your utilization ratio? How much of that $1,000 credit limit that you're using up? So that's what approves it. But your credit score just determines what kind of rate that you get and what kind of interest rate that you get, right? So now it depends on the credit card. Some credit card have a standard interest rate, so it doesn't really matter what your credit score is. So the interest rate could be 19%, right? 19%. So let's say, let's write it down here. Where's my pen? Pen. Oh, here it is, right here. Right? So it could be 19%, right? Some credit cards. So let's say, for example, this credit card here could be 20% interest rate, right? So it doesn't really matter what your credit score is. If you could have an 800 credit score, you can have a 750 credit score. It's a standard, APR, annual percentage rate, so everybody gets the same rate, right? But what determines the only difference is the your credit score now will determine what kind of credit limit that you get, right? So the higher your credit score, the higher your credit limit at the same time, right? So credit limit and credit score go hand to hand. So the higher the credit score, the higher the credit limit, and then also the lower the interest rate. So that's all the credit score determines, right? So credit score just determines the limit and the interest rate. But what determines whether you get approved or not is what's on your credit profile. Now, all these players here, they're all different they're all different players of the game. So TransUnion, Equifax, and FICO. TransUnion and Equifax are the credit bureau. FICO is this credit scoring modeling system that all lenders use. So these are the three different players that are involved when you're applying for credit, when you're applying for line of credit, when you're applying for credit card, when you're applying for a car loan. These are the players: Equifax, TransUnion, and FICO. So that's you right there, right? You're applying for credit cards or line of credit. You go to the lender. The lender now will choose um, which credit bureau that they're going to pull from, whether they're going to pull from Equifax or whether they're going to pull from TransUnion. Usually, they only pull from one of these credit bureau, and then after they pull it, you pass the criteria. You have no inquiries, or you have no inquiries in the last 3 months. You don't have any collection account. You don't have any late payments in the last year. And then they pull your credit scores. That okay, your credit score is 680. Boom, you automatically got approved. And now they just want to determine what credit limit that they should give you. So that's the underwriting criteria right there. So hopefully you've learned something, that you're going to replay this information, go over it, keep watching it so that you can understand this. Once you understand this, then it changes the way you apply for any type of product, because now you're going to start doing your research, you're going to start doing your homework. Now you're going to try to find out, okay, what kind of who now you want to find out where. So let's say you want to apply with TD. So now you want to know, okay, which credit bureau does TD pull from? So which credit bureau is TD going to get my information from? Is it Equifax or TransUnion? So if you want to apply with Desjardins, you want to do your research and try to figure out, okay, which credit bureau is Desjardins pulling from? Is it Equifax or is it TransUnion? If you're applying for Scotiabank, now you do your research to try to find out which credit bureau is Scotiabank pulling from. Is it Equifax or TransUnion? Why? Because both of these, they're Equifax and TransUnion, the two credit bureaus in Canada. They're independent. These are all public companies, right? So they don't communicate with each other, right? That's why you want to check your credit profile, because the information here could be different than the information here. You might have a 700 credit score here, but here you might have a 650 credit score. Why? Because these two companies are different. Equifax and TransUnion, these are two different companies. They do not share information, right? Where do they get the information from? Well, it's the lender that gives them the information. So let's say you get approved for a credit card of $5,000 with RBC. RBC will now send that information to TransUnion. They will now send your payment history to TransUnion, and TransUnion will store that information on your credit bureau. So that's where they get information from. They get information from lenders. They get information from people that, right? They do not generate information on their own. They depend on lenders. They depend on different financial institution to get information from, right? So that's why you want to be able to go on your credit profile, credit report, just to see what's in there, because as I mentioned, the information here could be different than what's in here. And if you're applying at TD, or you're applying at RBC or Scotiabank, and you have 700 credit score, and you have your credit history or your credit profile is good here, but because you didn't do your research, and then you don't realize that, oh well, RBC or Scotiabank pulls from TransUnion, but you're depending on your Equifax because that's the only thing that you checked, but you didn't check your TransUnion, and then the lender, this is where they pull your information from. Well, and you have a 650 here, and then let's say there's a bunch of collection account here, then you might get rejected or might get denied because you didn't check your credit profile to see what's on your credit profile. So that's why you want to know where the lender. So if the lender is RBC, if the lender is Scotiabank, where are they pulling your information from? Is it at Equifax or is it at TransUnion? Right? That's what you want to know, because once you figure that out, then now you can go and Try to fix that, try to improve that before you go and apply for the credit online. Okay, so I'm going to end here. That's a lesson for you. Back to school. We're back in session. Very important information that you need to know when it comes to credit, when it comes to lending, when it comes to automatic underwriting process. So that way you can increase your chances of getting more loans in the past. Okay, so until then,